Before GXC, there was social studies thereafter, yeah? And we were taught about time zones. Right now, I'm glad because many people are joining us from across the world to be able to look at this issue of making our country better and also making our finances better. So for the issue of remittances into the country, everyone dreams of going out one day. Okay, not everyone, because some have to remain behind. But we have a good representation of Kenyans out there who are economically active, and what they do is that they send money back home. Question is, how is this money utilized? Can it be utilized better? That's the big question that you're having today. And I'm glad we have financial institutions here with us today. Actually, the webinar is called Financial Institutions Engagement Session, and we'll be having, just to dissect what are the nuances when you talk about remittances into the country. How have we been utilizing our remittances? Can we do it better? And how can we bridge these loopholes that we see in the system to make our remittances investment better in the country? And also, I understand that we are entering an election year. Hopefully, my rich panelists will be able to, look also how we've weathered the election storm initially in terms of remittances and investment, which will be also something interesting to look at. But right now, I want us to start officially. My name is Noki Kimboy, and I'm very happy you're able to join us. If you're posting this, because it's social media engagement, there is the element of extension, yeah? And you hear something called, please, just tweet it. And the hashtag is, actually, you can tag us at Pangea Accelerator across all social media platforms. That is very important to note. But apart from that, I'm really honored to have all of you here. Without wasting much time, I would like us to, first of all, understand the people that, yes, definitely, I will, I've just been corrected. That's the beauty about blended platforms, because I just said accelerator and everyone was like, who, what, where? Yes, that is another wing of Pangea, which is quite interesting. And we were having an interesting discussion earlier on, but you're dealing with Pangea Trust and the issue is about remittances. So hashtag Pangea Trust, which is very important. Also Pangea Trust across all social media platforms, tag us so that we are able to extend this information to all people. Maybe some of those who are not able to join us today, they'll be able to see through those extensions. All right, without wasting much time, I see my profile is up. So I wouldn't say much. I'm Noki Kimbo, and I'm just glad to be here to have this conversation, especially as a member of the media fraternity. But today we have a rich panel, all right? And I'd like us just to take a look at the panel, starting with Anne Lowy, talking about, experience. This will be very critical. And she is the managing director of Pangea Trust. And she's a leading voice when it comes to talking remittances in the country and investment, especially in the startup ecosystem in the country. And hopefully from this conversation, she'll be able to, expound for us what are the avenues there are in the country that we can use our remittances to grow, and how can we channel that effectively? How can we bridge the information gap between the diaspora community and the local business ecosystem? All right, so that is Anne Lowy, Managing Director of Pangea Trust. Let's move on to our next speaker, whom I'm honored to also have. May we proceed to the next speaker, and that is, I saw, actually it's Andrew Kabeke. Andrew Kabeke, who is the head of international money transfer at KCB Group. And from the description, you can just tell how he views himself. He's tenacious, self-motivated, self-driven, honest, passionate, and hardworking individual. Do I need to say more? No, because today, actually, we'll see that tenacity in terms of how we are observing our international money transfer when you talk about remittances. What are the nuances to be able to understand that? Also today, one of our speakers is also Rosalind Charlo, who is the acting head of diaspora banking. And banking is the center of this discussion. I mean, are there things that we need to improve in our banking system to make it efficient, to remit money into the country? One of the big issues we've been having in the country, even the CBK governor noted that, is the remittance cost. Is there an element that can be worked in to reduce this particular cost? Maybe utilization of technology? Well, we shall be exploring that. But from that, we shall also have a panel discussion. And talking about panel discussion, I'm glad that we'll be having Ken Gishinga, who is the chief economist at Mentoria Economics. And Ken is the leading voice in the country on matters macroeconomy, not only in Kenya, but also across the world. So if you Google his name, most probably you'll see plenty of accolades. And I know some of you have looked at that profile and just seen their Microsoft in Seattle, USA. And all of a sudden you've given him a thumbs up, but he'll be able to look at the impact of remittances in our country and our economy at large. Also on our panel discussion, we shall have Victor Otieno Agola, and he's the managing director at Fifa Consult. I know you're asking where the A is. It is at the start of the alphabet. So we left it out, but it's Fifa Consult, and I'm glad that he's able to join us. He's one of the leading voices when it comes to talking matters, startups in the country. And I mean, what are the loopholes in the startup ecosystem that we can utilize remittances to invest, all right? So, ladies and gentlemen, without wasting much time, share this information. Hashtag Pangea Trust. Also, tag us at Pangea Trust across all social media platforms, and we will be able to have an awesome engagement. But without wasting much time, I would like to welcome Anlawi to set the stage for us for this particular webinar. What should we expect in regards to this issue of remittances? What are the opportunities that remittances can unlock in the country? And can we do better? Setting the stage for us, ladies and gentlemen, is Anlawi, Managing Director, Pangea Trust. Over to you, Anne.
Thank you, Noah. And it's glad to be the host of this conversation again. As you have mentioned, our core agenda as Pangea Trust is to ensure that we increase accessibility for alternative financing for startup and MSMEs in the continent, starting with Kenya. And for us, this has been a very pertinent conversation to lead, but also not only leading the conversation and lobbying and influencing, but also creating mechanism and creating platform to be able to unlock this conversation, unlock these investments and financing. And to enable us to be able to do this, we have been working with SIDA, who is one of our anchor partners who have been able to facilitate us to be able, one, to mobilize the diaspora networks and communities. Secondly, create collaborative strategic partnerships with different partners. And I would want to start with just painting a picture of who we are. And I will never get tired of mentioning the potential that the diaspora remittances can create and what we are able to be able to cast that imagination and what we can be able to do with it. To start us off, I would want to give a little background of who is Pangea Trust and our focus, what drives us, and why, what really keep on driving us as an ecosystem player. So Pangea Trust is geared towards unlocking diaspora investments towards impact-driven startup in Africa. We are working towards transforming the startup and SMEs towards people, planet, and profits. For the last 4 years, we have worked with 150 plus startups. 46% of those that we have worked with are women founded, and those that we have invested in have 15x their investment in 2 years. We are heavily invested in this process, and we are also committed to change investment landscape in Africa. we can move to the next slide. I would want to also cast a picture to be able to give, sorry, it seems as if we have a background noise. This is again, yes.
We can get you very clearly.
All right. All right. Sorry. Okay. Okay. So I wanted to paint a picture of why we are doing what you're doing. And I wanted to start from a global perspective of the startup landscape at a global level. Startup and MSMEs represent 95% of registered firms worldwide, and they contribute more than 35% of the GDP for the emerging markets. They also account for more than 50% of jobs created. But despite of all these benefits, the startup and small enterprises remain significantly underserved by financial institutions. Why? Because they are very high risk ventures. They are very early on. We also know the statistics when it comes to surviving, the survival rates the past year of starting out a business. So they are very high risk. So that's where the gap is coming from. But still, we need to create the neighboring environment where these businesses are able to unlock the initial capital they require for them to thrive. So, and the gap that we are talking about here, it's about 70% of the startup and SMEs experiences financial gap of 285 billion in sub-Saharan Africa. So that means there is a huge gap, up to 70%, that need to be bridged. If you can go to the next slide. And that's where we see a sweet spot for Pangea and other like-minded ecosystem enablers and players to contribute in terms of creating alternative investment mechanism or financing mechanism. And we also see banks playing a very key role in enabling and creating collaborative strategic mechanism that can be able to bridge some of these challenges that we have seen. So I just also wanted to maybe to paint a picture of some of the challenges that these leads to this huge gap. That include lack of understanding on how to position and unlock different investment mechanisms. These businesses also lack accessible right information to be able to make the right investment decision. Lack of sufficient alternative investment mechanism and platform to be able to drive investment, and lack of linkages and referrals to investments. And this contributing factor, we have been able to derive them from a diaspora mapping report that we have just concluded for Kenya. And we were looking at what are the possibilities and investment appetite that exist, and what are the hindering factors for investments. And these were the key highlights that came out of that process. Now, and where does the diaspora remittances sit in? As we already know, it's projected that across the continent in Africa, it's projected that diaspora remittances will hit 45 billion USD this year in 2021. That means there is an increase of diaspora remittances of 6.1 despite the COVID economic downturn that was expected. And in Kenya, in 2020, we saw 3.1 inflows of diaspora remittances in 2020. This is projected to increase to 3.7 in 2021. Currently, the Ministry of Labor estimates that we have 4 million people as diaspora living in different countries constituting the diaspora community. And we see a huge potential to be able to activate these diaspora communities, to be able to remit and set aside significant a percentage that can be able to be channeled as investment. Currently, the percentage is less than 5% of what is being set aside as investment to startup and SMEs in the country. And we are looking at increasing this to maybe 25 to 30% by 2030. That will significantly increase the threshold that is set aside to around 900 million USD that might be available for investment to startup and high growth companies in the country. If we can go to the next slide. And another key sector, or rather industry, that we are keen on as an organization is Islamic financing opportunity. It's a huge sector. Currently, the Islamic finance market stand at 2.1 trillion USD globally. However, it's less than 1% of this that have been channeled as investment in Africa. Considering that Africa has 1.3 billion people and 53% of those are Muslim. But nevertheless, very few innovation or investments, tools or frameworks exist that can be able to channel these existing Islamic markets opportunity that exists. And that's where we see a huge opportunity for us as Pangea. To one, can we be able to innovate mechanisms that can be able to unlock more of channeling of investment in Islamic finance to Africa? Secondly, can we create Sharia compliance products that are able to unlock more financing opportunity towards African founded startups and solutions? Next slide. And so some of the areas that I wanted to highlight that have come out of diaspora mapping remittances report that we have just carried out, and because of the risk that is attributed to diaspora remittances. Some traditional areas of investment that have stood out is real estate. And as you already know, the biggest chunk, up to 95% of the remittances channeled or sent back home goes to household consumption. And most of the big chunk of that goes to education and health through family household consumption. Now, what are the key interests and areas of investment that are coming out? Most of the respondents or diaspora communities that we have been able to engage during this process cited opportunity for them to start business home, and they are willing to invest in that process, being able to establish a collaborative mechanism, or rather establish a business in a collaborative manner. And in that case, they are willing to invest in such business. Also invest in businesses that are creating impact on the ground, and it not necessarily connected to the country they come from, but connected to African heritage. Another area is investing in innovation and technology. Any business that is powered by innovation because it has potential and scalability factor. Another area is a business that is driving impact and it has SDGs alignments because they feel that they are contributing to changing the communities that they aligned to them. Now, as part of this, I just also wanted to highlight what has been our key focus areas for the project with the initiative that is funded by SIDA. One has been diaspora remittances mapping. And what is the focus of that? We wanted to, one, establish what are the key driving factors and insights that we have to integrate in our financial digital solutions that we are putting in place to be able to unlock diaspora remittances as investment. Secondly, how can we create an innovative product, and what aspect do we need to explore incorporating the findings and the insight that we get from the mapping report that we are doing in Kenya, Somalia, and Ethiopia. So the diaspora fundraising and innovative product is a digital platform that will be able to channel the investment. We'll be able to mobilize diaspora networks to remit their remittances towards selected and business that we have done KYC, that is know your customer. And then also we have carried out the due diligence and we have had all the clearances. With the platform then it's able to ensure that there is transparency between the businesses that they can invest in and and also the businesses can also be able to interact with the diaspora communities that will be part of the platform that we have put in place. Another key driving aspect of this project is institutional partnership, creating or rather building frameworks with like-minded partners who can help us scale these mobilization and fundraising in different countries in Africa. Currently, we are starting with 3 countries, rather started with Kenya, Somalia, and Ethiopia, as I mentioned. We are also looking to scale this into Tanzania and other Tanzania, Rwanda, and Zimbabwe. As some of the countries that we are looking into. So for us to be able to do this, we have to build on and anchor it on strategic partnerships. So this has been a driving force, and that's why we are also speaking to financial institutions to see what are the existing strategic positioning that we can be able to anchor ourselves on. And the 4th one is Islamic Finance. As I mentioned, how can we create Sharia compliance products and services, and how can we also support or rather channel to businesses that are Sharia compliant to be able to unlock innovative Sharia compliant investment opportunities. So those has been our 4 anchoring key strategic areas that we have been working on. And that's why we are continuing to champion and convene this conversation to be able to also include other key pertinent conversation and dialogue and discourse that are able to strive and drive this conversation forward. So I leave it at that as of for now, and then we can come forward and continue the conversation during the panel discussion. Thank you so much.
All right, thank you very much, Anne. Wow, key numbers mentioned right there. Talk about people, planet, profitability. That is what every investor out there is looking at. But the question is, this gap, if 95% of the money being sent back home is going to household, needs like education, I believe there is a huge opportunity to channel that money towards our MSMEs and our startups. And I'm glad something is being done by the Pangea Trust to make sure that this is actually being resolved. And I'm glad we have the banking institutions, financial institutions with us here to be able to put in perspective the role they're playing and their observation in regards to remittances. From the CBK numbers, I mean, looking at October, $337 billion being sent back home, September 309, and August 312, quite incredible numbers. Anyway, with that said, in the interest of time, our next speaker talking about matters remittances is Andrew Kabeke, Head of International Money Transfer at KCB Group. Andrew, the floor is yours.
Thank you, Noah. Thank you, Anne, for quite an insightful introduction and into the program. A fantastic foresight for Pangea and what we need to do. And we hope that we can be able to capture that market more directly into and solve the issues that normally would come up around remittances. So Rosalind, you can put up the presentation as we start off. And so just to mention, the partnership between KCB and Pangea is all about looking at how then do we ensure that you as in the diaspora, you looking at remitting money back home, that money lands in the right hands. A good example, and to understand some of the problems that we face, is for those who have lived in the diaspora, you always send some money back home, hoping that you will find a mansion when you come home, only for you to land here and find 4 walls and some mabati and a roof, what you call a room. You find a room, yet you expect a mansion. So we're here to try and resolve those kind of things. Other kind of problems we have is in the African culture, we have this thing of taking care of our parents. And so today, it tells you have a headache. I've been having a headache for the last 3 days. And then you decide to send him money, immediately gets hold of the money, the headache heals. And so the money goes into his pocket. And so to resolve some of these many issues that we have, well, KCB has a fantastic opportunity, and then we thought it would be a good partnership with Pangea because of where the focus is, and try and present this to us. So just to start off, I'd just like to mention, and this Anne had touched into, some of the reasons why, at least we have remittances coming through. On to the next slide, Rosalie. And so the main reasons why people actually send money back home, main reasons why you find this kind of remittances coming back home is, one, investment. Everyone is looking at investing back home, whether you want to buy a property, whether it's shares you want to buy, unit trust, insurance, trying to save for your retirement, whichever way it's investments. That's one of the reasons as to why people send money back home. But unfortunately, the methods of sending are quite queer. Like I mentioned, you are building a house, you expect to find a mansion, you find a room. And that happens a lot, and we have seen that happening a lot. Sometimes you send money back home, you're looking to buy a property, shock unto you, you find it in the middle of a forest where you're not even supposed to be owning a property. And that is the actual reality of what's happening in the ground. Another reason is, of course, savings. People send money back home because you expect when you come back home, as it is, particularly in Kenya and even any other African countries, we expect you to be wealthy when you come from what you call Maju, what you call the diaspora. We expect you to be very wealthy. But then now that kind of a lifestyle is affected by how the money comes back home, because you find that you're looking for it to send money back home for savings. There are no opportunities into how you can save. You have no idea how the banking sector works, which is quite different from how it works in the diaspora. You send it to your brother, your sister, your mother. They tell you they're saving to mobile money. Mobile money becomes a need to be used. So again, that money tends to disappear somewhere. The other thing mainly is family upkeep, which are payments done to take care of your relatives. Again, an African thing that is done a lot. Utility payments ranks very high, because unfortunately we have the culture of taking care of our old. As you're given birth to, you're educated, you're taken care of, for you to return the favor, so to speak, in quotes. And despite that culture is changing, we still find a lot of issues to do with the utility payments. And then emergency. This is what actually is a killer. You want to pay hospital bills, you have to get into funerals, harambees, and everyone is looking at you and saying you have to contribute because you live in the diaspora. And so some of the reasons why people send money home. There are many, but these are the major reasons in a nutshell. And so as KCB, we have come together with different partners to look at how we can be able to at least assist and ensure that this money you're sending back home is actually reaching for the right reason, for what it is intended to be used for, and not for the pocket. Someone once said sometimes a headache means a pocket. Just money needs to be in the pocket. I tend to disagree, but however, it is what it is. So just to give you a small overview of what KCB looks like, just at least to know that anytime you're dealing with a bank like KCB, we are an old bank. We have been there for ages, and sometimes that works for us, works against us. And we are becoming more and more digital. I know when people hear an old bank, they think of bureaucracy and the way things used to work in the old days. Well, at least we don't work with a stick. We have become agile. We are agile. We are very digital, and that's the reason why we find ourselves in this kind of presentations. And so, in terms of profitability, to the third quarter, and this is public information. You can be able to find it in our website. We are at least hitting around 25.2 billion in profitability in the quarter to 2021, and you see a better outlook towards the end of the year, despite COVID. Our total asset base has grown and keeps on growing. We're at around 1.28 billion in terms of assets, and this keeps on growing. These are figures up to September. 25.9 million customers, and of course, huge stuff. These are across our network, and our reach is huge. We, as much as we have a lot of branches, we are the biggest bank actually. Arguably, I know some people will argue with another bank, but arguably we're one of the biggest. I can see Noah smiling. I know what he's thinking, but yeah, we are the biggest bank, meaning that you can be able to reach us for any services across ATM networks, agents, digital merchants. We're really going out digital because that is where the world is heading to. And of course, as it is.
Andrew, you are muted. I kindly request you unmute yourself.
Yeah, okay, I don't. Okay, something happened. Sensitive. Is it digital? Sensitive.
No, it's
machine.
about the big bank thing.
The big bank. No, yeah. So, in the terms of the presence of the countries we are in spread wide. We are in Kenya. On to the next slide, Rosalie. We are in Kenya. We are in Rwanda. We are in Tanzania, Burundi, Southern Sudan, Rwanda, Tanzania also, and we also have NBK as one of our acquisitions that we have. And these are important just for you to understand in terms of the reach we are in. So even if you're looking at investing back home in any of those countries, we're able to assist, we're able to come in. And some of the things which my colleague will speak deeper into is we not only look at you as a customer, we look at how then do we ensure that you get the service you require. So if you're looking at an investment, if you're looking at doing a building, then in our panel, we have already certified contractors that we're able to link you with. If you want to build, we're able to give mortgages, and that ensures that when you come looking for that mansion, that's exactly what you find. So instead of you having to send your money back to your father to build for you, you're able to send it to professionals who then will do a good job for you. And from there, at least you're sure that if you're sending money for the pocket, it will go to the pocket, to your father or your mother. But if you're sending for a building, it will actually go to that particular building. And so why this kind of partnerships is because one, customer first. If you look at what Anna just explained around Pangea, is looking at where the customer is looking at creating products for the Islamic banking, creating products for remittances, understanding that particular market. And as KCB, customers are always at the center of what we do. That then makes this fantastic kind of an opportunity for us to be able to see then how do we help in all these investments, the small businesses. Today, we even have a campaign that talks about partner per ground. That's just talking about the small businesses and how we can invest in them. Efficiency and productivity is one of the things we look at, ensuring that today, the cost of remitting money is quite high. Looking at how then can that be reduced? How then can that be more affordable? And ensuring that it actually reaches in the right way and the right person. Of course, digital is what is happening every other day, and all these services are digital for us. You can access your funds on a digital way. You can be able to send money back to home in a digital manner, and that ensures that at least everywhere you are, you can be able to access your finances. And of course, you have the regional relevance. Then down to the meat of how then our remittances work. On to the next slide. So what we have done as KCB is, this is the account offering. So yes, I will jump into this ways to remit money. So being the biggest bank that we are, and being the fact that we actually bank majority of the institutions, majority of the county governments, we bank majority of the supermarkets and the like, we have made our remittance to be in such a way that if you want to buy something from a supermarket, if you want to send money back home for shopping, you can actually pay directly to that supermarket and have a voucher given to your parent or your sister to them to and be able to actually do the shopping. In terms of delivery to bank accounts, we're able to deliver to any bank account you require. Well, if it's KCB, we are happier. However, if any other bank account, we're able to remit money into the bank account that you require and any other wallet you need, and also into any bill payments. So in terms of partnerships, Just press next, Rosalind, so the slide can fit. So in terms of partnerships, we have looked at where the money is coming from. We have seen the continents, the money that Anne just spoke about. We have seen the continents, and we have quite a number of partners that you can access either via physical locations, via APIs, or even apps, and even online situations, and they range across. We have the likes of Western Union, Tunes, MFS, World Remit, Wave. We have MoneyGram, we have Small World, the Hub Shield, all these kind of partners that we partner with. And you're able to remit your money back home in a safe manner, and ensuring that at least then, if you're looking at how then do I get to open an account, we can be able to, our diaspora team will speak about that. And then from there, anything you require, and this ways, then you can be able to remit your money back home easily, and ensuring that actually it is delivered. And the fact that you already have access on your money on a digital platform, you can confirm that that money has actually reached home. If the fact that Pangea is looking at how then to organize investments, KCB comes in a good play, and you're able to put that together with Pangea, invest in whichever platform, whichever company that qualifies for investments, and we're able then to assist them in terms of remittance of the money home. So both individual, corporate, we are able to cover that, and we're able to ensure that your money lands back home safely, and it is utilized for the right thing. That is the most important message, at least, because of the problems that we have across. So I'll stop it at that particular point, and if there are any questions, Noah, then I will be able to pick up them later, but I will allow from there Rosalind to proceed. Noah, over back to you.
Thank you very much, Andrew, for that. So you're one not to, to say your bank is the biggest, lest the mics fall on you. Yeah, but I'm glad you're able to point out some of the initiatives that you're doing to make it easy to remit money. Right now, without wasting much time, I'd like to welcome Andrew's colleague, Rosalind Charlo, Acting Head of Diaspora Banking, KCB. The floor is yours, Rosalind.
Thank you. Thank you so much, Noah. Good afternoon, those of us joining us from East Africa. Good morning to those in the US. My name is Rosalind Charlo, like Noah said, and I work at KCB Diaspora Banking. So what we do is to offer financial solutions to the Kenyans who live and work outside the Kenyan territories. So I'll go straight to the products and why bank with the KCB and through diaspora banking proposition. One, each customer will have a relationship manager. So we understand this time difference. So the customers have account managers who are their financial advisors. So that's one of the benefits. The other thing is that investing through KCB, this is a bank that's been there for over 120 years. So we've offered financial solutions in East Africa and in the region. So we've been tried and tested. Remember what Andrew said, that some of us have burnt our fingers. So when you're investing your hard-earned cash, it's good to invest through a reputable and solid partner. So it's important to deal with the professionals. So as we are sending money back home, we've seen there's a lot of competing needs. There's supporting family, there's utility payments, but it's very important to pay yourself. So we need to have savings, and it's also good to have investments, because after the toil and hard work in the diaspora, what do we come back to? Yeah, I normally tell my customers that you live in very good environments, the likes of maybe Kileleshwa in the US, Kilimani. So it's only fair that we save and prepare for our landing back home, so that again, it's a safer landing. So KCB is your partner and will support you in that. So in terms of products, we do offer products for both the consumer and the business person, because the diaspora has evolved. They also want to do investments back home. So they're into SMEs. We have people in the diaspora who registered companies. There are those who are doing agriculture. So KCB is able to offer you that kind of solution. So if you have a business, you can talk to us in terms of a business account. We're able to support you in terms of facilities. That could be a term loan, working capital facility. If somebody is into agriculture and they need an asset, financing, they're into transport business, so the bank is able to support that venture. And the venture is, the director, of course, is in the diaspora, but the business is registered in Kenya, so we're able to support you. And because of our branch network, you are assured that even in the remotest part of this country, you're able to get banking support. That's if you need a relationship manager, we'll offer you that both in diaspora banking, and our branch network is able to support you. Of course, we've invested very heavily in terms of digital platforms. So our branches are where we discuss about the next level. After having an account, what's the benefit? Not having an account is good, but what's the next level? The next level is growing in terms of your business and having an investment. I know the traditional investments have been property, but again, we've seen the individual in the diaspora has also diversified. Business is also a form of investment. We also do offer personal accounts. Like I said, you can have a savings account if you reside in the diaspora. You can get a mortgage. You are a very stable and strong partner when it comes to mortgage financing. We offer financing both in Kenya shillings and in dollars. So how our financing works is, of course, we are looking at the income that is supporting the borrowing is the income in the diaspora, but the property being financed is in Kenya. So a customer can be financed to buy a piece of land, can be financed to construct, can be financed to buy a complete apartment or a complete townhouse. That is available to KCB. To make it even better, I know the people in the diaspora sometimes have no idea where to search up for a property. So we have a KCB property center that supports our customers to identify a property. So I could be residing in the US and I know that I want to buy a property, say in Kilimani, but I don't have the time to shop around. So KCB is able to identify a property for you. And once you're happy with it, you've signed the agreements, we come in and finance. We also do offer personal loans. There are customers in the diaspora whose salaries are remitted to their bank accounts. So we can get into personal loan discussions with them. Very, very good terms. In the interest of time, I'll not go into the details, but those of us who would be interested, we're able to guide you in terms of that. We also do offer Sharia compliant products, and I'm very happy when I saw Anne discussing about it. So we are cognizant of that. So we offer Sharia compliant banking solutions, both in terms of accounts and loans, even to our diaspora customers. So we are a one-stop shop. Besides the accounts, the loans, we also do offer insurance. Insurance is also another aspect. When we say KCB is a partner for ground, we're able to offer you a wholesale or wholesome products. You can get an account with KCB. You can get medical insurance for those of us who have dependents in Kenya. That's comprehensive medical for our dependents. That could be a parent or a sibling. KCB is able to offer you that through our diaspora proposition. We have customers who already have existing properties. The bank is able to offer insurance solutions for the property. We also do offer insurance solutions for vehicles. So we are able to, whatever investment that you have, we are able to discuss and offer a solution. So in terms of other investments, we've said that we are diversifying our investments from traditional being real estate. We're going into business. We also do offer investments through our KCB capital. So a customer in the diaspora can trade in the Nairobi Stock Exchange. A customer can also trade in government securities. We offer that through our KCB capital. We also do offer advisory. So for our customers in the diaspora, they will not be left behind in terms of banking solutions while they are away. The bank also offers high-yielding savings accounts. The reasons for sending money, I remember there was savings was one of them. So as you remit your money back home, we're able to discuss with you some good account that can pay you a good return. Currently, we call it a gold savings account available in Kenya shillings that gives our customers a high return of 6%. However, we're able to negotiate depending on how much a customer wants to place in. We do offer foreign currency accounts because we are cognizant that once you jet out of this country, you start earning in foreign currency. So our proposition is that we'll operate a foreign currency account for you. Could either be in dollars, in pounds, euro, South Africa rand, Swiss franc, Australian dollar, Canadian dollar. So the customer is able to operate an account in foreign currency, and we'll offer them negotiable exchange rates should they want to convert from the foreign currency to Kenya shillings. Another thing is that we also do offer a very robust online banking platform. because once you've sent your money, you start with an account, you do remittances to KCB. You want to be able to confirm, is the money, you want to check your transactions if you have rental income that you're earning in Kenya, if you have business in Kenya. If you're in a chama, you can have a chama account through KCB. If you're in a SACCO, the Kenyans in the diaspora have also formed SACCOs. So those SACCOs are able to get bank accounts and even loan facilities through KCB. So our online banking platform enables our customers access their accounts real time. They're able to see what's happening. They're able to remit money from their KCB account to another account in case you're buying a property, or you want probably to send money back home. Probably you've acquired some, you've sold a property in Kenya and you want to send the money back to the diaspora. That is also available. We offer children's accounts, so we want to inculcate a savings culture in our children. Hence, we have the CAB account. So in terms of personal accounts, you can have an individual account, you can have a joint account. You could also have a CAB account for our children. One thing I would want to say is that for a customer who resides abroad, to get to open an account with KCB, get a facility through KCB, and even enjoy the benefits of being a diaspora customer, this customer doesn't need to physically leave their country of residence. They can initiate all that while they're away. And through the relationship managers and through our branch network, we're able to support our customers bank seamlessly while they work in the diaspora. My colleague Andrew talked about the various partners that we've signed up to make it very easy for our customers to fund their accounts. So in terms of account access, initially we had the web-based online banking platform that was available to our customers. We've recently rolled out an online banking app because we realized that our customers want to have access to their accounts on their mobile. So the iBank app is available on the app. The iBank app is available to our customers, available both on Android and on iOS. So our customers can access their accounts real time. Because we understand that we're operating in various time zones, we have a 24/7 contact center that's available for our diaspora customers. So I know there could be existing customers on this call, customers who want to join our proposition. I'll take a second for you to pick those contacts. We have an email address, we have contact center numbers, also available on our social media, because we want our customers to easily reach us in terms of service, if they have suggestions or complaints. So that's our brief presentation. We made it very brief so that we can have an interactive session.
All right. Thank you very much, Rosaline, for that detailed presentation. You've called it brief. Let us call it brief too, all right? With that said, next on the program, we have the panel discussion. And right now, I just want to jump us straight. Let's start with Ken. Ken, when you talk about remittances, sometimes looking at the study, the remittances mapping that was done by Pangea Trust just the other day, 95% of remittances going to household. Give us a macro picture of the impact of remittances in the local context as a country. I'm also meant to understand that remittances is our highest or the biggest forex earner. What does that mean economically? Ken.
Thank you very, very much, Noah. And thank you very much for the presenters on giving us a very good breakdown. Indeed, as I focus on the macroeconomy of Kenya, one thing I can start saying is the major foreign income earners for Kenya used to be around tea and coffee and tourism. But since 2015, that changed, and diaspora remittances became one of the leading sources of foreign exchange. And for me, that's very much exciting because I've always said the strength of Kenya, yes, we have good coffee, good tea, good animals, but it's still with the quality of our people, the education system. These are people who have gone to the UK, to the US, to the Middle East, they are working hard and sending much more. So I think for me, it's a sign of a maturity of a country, and this can be a very, very good source of income, and also a resilient source of income. If you think of the COVID pandemic last year, when every sector was hit, we still saw increase in diaspora remittances despite the major resilience. So I think moving forward, it's about creating policies that inculcate the diaspora more into Kenyan life. We always say it's good they send money. Also say they also need to be involved with other aspects of the Kenyan society. So I'd say it's something that, if well harnessed, can power this economy well into the Vision 2030.
Okay, Ken, I want to bring in Victor. Victor, I mean, for the MSME or the SME sector at large, the decry for funding has been there for the longest time. We understand SMEs, actually MSMEs, are running our economy. They're providing majority of the jobs, but still getting the tail end of funding in the local sector. And we've cried and cried about that. Even banks, financial institutions, de-risking some of their, products, for example, just to bring in that segment of the people. But looking at diaspora funding and its potential to fund our SMEs, how viable is it? What is happening in that regard from your understanding?
Absolutely. Thank you very much, Anne and the team, and as well as KCB Group for the presentation. I think as Anne had showed in her presentation, SMEs are the backbone, literally, of the economy. We have a death rate of around 75% within the first 3 years. Of course, if you were to look at the last KNBS report 2016, access to finance remains a major challenge for SMEs, contributing to the high mortality rate. That's number one. So I think if you were to look at SME financing from a spectrum, bank financing has been there, but has not performed as well. Looking at the latest CBK report, we are seeing SME loan portfolio against total loan book still standing at 20%. This is despite, banks doing a lot of fundraising, de-risking coming through, etc. So there is still a challenge, and I think it's a question of business model. Based on our own studies, we are seeing mobile credit being emerging as an alternative way of financing small businesses. And because majorly a lot of these businesses are quite small, over 90%, they're informal, they're not literally structured, and they're probably not bank ready. So for me, I think from us, we are very excited to see an alternative form of financing going towards small businesses. And I think it's viable if you're able to harness it, if you're able to structure it in a manner that it can give access. I think it's very, very exciting for us.
Indeed, and here's where, Anne, you come in. And I mean, you mentioned in your presentation the enormous opportunity when it comes to how we can channel these remittances into viable investments. You mentioned earlier on, people in the diaspora are very much interested in real estate sector. And, even in the country is one of those sectors everyone is like, you should put your money in real estate sector. But from your observation and even from the study that you did, what are other viable areas that people in the diaspora can channel their money towards with good return on investment?
Thank you, Noah. And I would want to also bring in a different perspective. And that's why I highlighted some key areas, traditional key areas of investment that have been considered. But also some of the key insights that came out of the decision to invest in land, property, assets is because of trust. And trust have so many layers. And one of them is, do I trust myself to make the right decision? Do I have the right partners? Do I have the right channels? Do I have the right information to make these decisions? So that is a huge contributing factor, and that's where we come in as an intermediary to ensure that we create and provide the trust levels that are required to be able to do this and be able to provide the level of comfort for them to be able to make the right decision to invest. So trust, creating a trust enabling environment. Secondly, is providing the information, the right information that is required for them to make investment decisions. So you find right now, even if someone is interested, and this is based on the insight that have come out of the mapping study that we have carried out. So as much as so many diaspora networks would want to make investment decision, they don't have the right information. Where are these businesses? What is the process for me investing? How do I go about? Who follow up for me? And those processes or frameworks lapse. Again, that's where we come in as Pangea Trust to ensure that we can create a mechanism and framework to enable the diaspora community to be able to invest. That is the channel. So as much as the bank exists, it's one of the conduits. There need to be so many other building blocks for it to happen. And for us, even as we do this, we can't do it without banks. That's why we are exploring different partnerships with banks. But then, as I mentioned, tying it to the first point, trust. So there need to be, it's investing in startups or in businesses. It's a relationship focused. And that they need to feel that they have the right information. They understand where these businesses are. They are sure that there will be mechanism for following up, and their return on investment will be realized, and there's someone to follow up on that. So that's also that's where we are coming in to ensure that we can cultivate this. And I also wanted to bring in another perspective of different generations when it comes to diaspora. There is the first generation. The first generation is focused on investing in traditional areas of investment like property. But when you come to second and third generation, they want impact, they want more connection to the continent. They don't want to just invest in family. They want to contribute to economy. They want to be more engaged, more involved. And with that, for them, as much as it makes sense for them to invest in property, they already have some heritage when it comes to property from their families. So what else? What else is exciting for them? And that's where the business investments come in. And you'll find most of the respondents who are interested in investing in startup and businesses are they're second and third generation, and they are the majority that we are focusing on. More than 2,000 respondents that we are part of the networks that we have been able to mobilize in Europe and the US, second and third generation who are keen to create impact. And that's where we come in. And for that generation, impact is important. Connection to the continent is important, not in terms of amassing wealth in terms of asset, but creating impact that is bringing change and driving economic growth. So investing in businesses and startups, then take a high precedence for that generation and that segment. And that's why if we are able to profile potential businesses that are viable and also be able to guarantee return on investments in terms of making sure we provide follow-up mechanism to ensure if we invest in this business, there is high chances of them to be able to scale and grow. So in a nutshell, those are the driving factors, but also areas of consideration for investment for this generation and segments of diaspora that we are targeting.
Okay, thank you very much, Anne. You're forgiven.
Sorry, let me mute.
Definitely, lovely. That's why I'm glad Victor matched the red together with the red mute button, just to remember to mute right after speaking. But thank you very much, Anne, for that. I want to bring in Andrew. Andrew, I mean, there was a very interesting question here in regards to the drive behind steady flow of remittances in Africa? Because Anna's mentioned all these opportunities, especially non-traditional opportunities that Pangea Trust is helping, together with other partners, the banking partners, to link that resource of remittance into viable investment. But understanding, what are the key drivers when we talk about remittances into the continent of Africa? I know it was mentioned, sending your parents money, nasikia kichwa inauma, so ukituma dola mbili tatu kichwa inaacha. But looking from an overall perspective, because in Kenya, the figures have been going up, and even they're projected to go even higher. So from a banking perspective, what do you think are the drivers of remittances in Africa?
Okay, thank you, Noah, for that. Quite interesting and quite an interesting observation. So basically, what is driving this and what you've seen, and Anna has actually been mentioned it, is about the generation, first generation, second generation. If you think about it, at the time there was a drive to take students out to go and study outside in the diaspora. And there was like what do you call it, a migration mass, or there was a lot of interest at that particular point for guys to actually travel out and go study from the diaspora. And so what has happened is these particular individuals now have matured and got into the employment sector, and now they're earning they're the ones earning the money, and everyone wants to invest back home. With everything that is happening in the economy, everything that is happening around the world, everyone is thinking I have to invest back home because the interest now is going back home. So that again has taken a huge interest and drive to these remittances, because that first generation we are talking about is, and also now a second generation which has also gone there, as they're all earning and they're all looking at how do I invest back home, because I need to go back home and I need now to at least feel the impact, get the impact felt home. The fact that now it's cognizant that the US, UK, UAE, whatever it is not my home, but basically I need to be able to invest back home. So that is a key driver. And now then the question begs is, as they're bringing back these remittances back home, what are the remittances being used for? And again, it's all about those soft impacts that everyone wants to have a feel on. Number two is the fact that you also want to make some investments. Investments in Africa now have become outmost spoken. Initially, it used to be anytime you want to invest, you think about land. But now we have been opened up more to land. There's more investments that are than just land. These shares you can be able to buy to. There's different savings opportunities. Unit trusts have come up. The government bonds, the buildings, all these things that have come up, and now people are more educated to understand that savings is actually more. Investments are a bigger and wider frame other than just buying land. A good example today, even if you went to the panel, you'll discover that most people have not even bought land home. What our parents used to do, we've actually bought them in urban areas. And so those kind of things are actually becoming a driver. The fact that now the people who migrated, went to the diaspora to do their studies, are now earning. And because they're earning and the countries have come out clear about more of investments, now that then becomes a good platform to say, let me remit back home and do the investment. I think that is what we are noticing to be the main drivers of the increase in remittance. And we'll see that keep on increasing as more and more of this generation start earning, and then they move into that bracket of income generation, and they're able to send their money back home.
Okay, thank you very much, Andrew, for that. And it's quite interesting that you've mentioned that potential and that drive to send money back home. But, life is not a bed of roses. And if there are roses, there definitely are thorns. So bringing in Roslyn, let's talk about thorns, all right? And once again, I'll point to my friend Victor, because he's worn red roses. Just next year, we're going to be having Valentine. That's a discussion for another day. Maybe remittances go up during Valentine's. You never know. But Roslyn, looking at the challenges, one of them, I noted them earlier in regards to barriers to remittances and easy flow, the issue of cost. Is there anything, I know you might have touched on it, but what are the other barriers that we're seeing to easy flow of resources back that might be hindering maximum, remittance of resources into the continent of Africa from Africans working abroad?
Okay, thank you, Noah, for that. In terms of cost, the traditional way of remitting money was wire transfer. And of course, if you look on average, if I'm remitting funds from the US to a bank account in Kenya, I would be charged between $30 to $40 by the foreign bank. So that was prohibitive. But currently, we've had a lot of digital partners who've come in, and they don't charge a hefty fee that like what was being charged through the bank remittances, bank to bank. So with the introduction of the money transfer providers, it's become better. So the cost issue is being it's not an issue as such at the moment. The other bit is about access to the remittance providers. So I'm looking at the people who work in the Middle East, for instance. Those people work long hours. So if they're not able to be connected to the digital platforms, they have to go to a physical outlet to remit money. So in terms of access to remittance providers, that's still an issue when it comes to Middle East. But I know that, of course, we are thinking around that. There are people who are working around the clock to see how to sort out that issue. Another bit is about the amount I can remit. So for instance, if I'm using a digital money transfer provider, there are limits. So if I want to remit 10 million shillings, for instance, that could be above my limit. So I would still want to remit through the bank. So the limit that I can remit at once to an account in Kenya, if I'm using the digital providers. So because there's that limit, then I would still need to go back to the traditional way of remitting money, which is the wire transfer. So of course, there are discussions that are ongoing to see how those limits can be enhanced. Another issue is about regulations. Some African countries still are a bit restrictive when it comes to remitting money. There's a lot of questions when somebody wants to remit money back home. You have to be vetted when remitting money to a foreign bank account. So that is still prohibitive. And it leads to some people thinking about not very good ways of remitting cash, like physically traveling with cash to the country. So regulatory issues in some countries, it's still an issue that needs to be addressed so that, again, we can have the smooth flow of remittances. For exchange rates, if I want to remit money, I want to be able to exchange at a very good rate so that I can gain. For instance, if I'm sending $1,000, it's in my best interest if I get a good rate so that I can get this money remitted to an account in Kenya or to a mobile wallet. So the issue about exchange rates is still prohibitive, but there are workarounds. If you are in US, for instance, I see customers looking at the digital provider that offers the best rate at a certain time. So of course, with options, customers are able to see which provider is offering a better rate. So for me, those are the issues, but not as bad as where we started from, as having one traditional channel of sending money. So there have been there's been a lot of progress in terms of remittance. So a step in the right direction, but some work to be done. So that's my feedback on the issue about challenges facing remittances.
Definitely, and I'm glad you mentioned some of those challenges. For our participants, I'm seeing questions are already trickling in. Thank you very much, Peter Olo, Daniel Kiriungi. They have some interesting questions right there, of which we want to address, but also as part of our response, we're looking at the dynamics where the money is coming from. And traditionally, we've seen North America being very heavy. We've seen Europe being very heavy, Middle East. Looking at these dynamics, maybe to bring in Ken briefly, before we address these questions, do we see a variance of needs, from these different ecosystems of Kenyans, and that we are able to be able to cater to those specific needs based on where the money is coming from? For example, Middle East, can we see that maybe they are so much interested in the issue of Islamic financing that they want to invest in Sharia, compliant ecosystem and projects. Ken, have you seen that variation?
Absolutely not. There is a significant variation within the various diaspora pockets. But even before maybe I address that, maybe it's just to add on to what Andrew said about the big drivers of diaspora remittances. What he said was very true in terms of people who've gone abroad, have studied, have working, and are coming back to Kenya. But I've also noticed of late, there's also a new trend, particularly in the US. Remember last year, there was that very messy election in the US. The political landscape in the US became very toxic. And I've seen people who have started saying, wow, I think I need to now start thinking about Kenya. But to your point, there is a significant difference. And every time I have a panel, I try to focus on what are the different regions we are addressing. In the North American market, I'd say this is your more advanced diaspora. You're right, more than 50% of remittances come from there. And just by the nature of the American economy, it being the largest economy in the world, you get the levels of wealth are much higher, the are much higher. So in as much as, yes, everybody is looking for real estate, you get to see that also people are looking for sometimes more sophisticated products. What I've noticed in the Middle East, it tends to be more recent diaspora, people who've probably been there in the last 10 years or so, working at your hotels in Dubai, hotels in Doha. So sometimes the income levels are a bit more modest, and therefore the investment also appetites tend also to be looking for very practical needs that can be addressed within that market. But that's just broad strokes. Obviously, there are some areas where there are some outliers, but generally that's how I have noticed it.
Okay, thank you very much, Ken. So let's go to the questions from our participants. Question one is coming from a technological perspective. And I think this discussion we had some time back, I think it was a couple of weeks ago with Anne, about utilizing technology to streamline remittances. And now Daniel Kirungi is asking, as experts in the international remittances, what is the role you see blockchain playing in the ecosystem? Anne, do you have a comment before we go maybe to Andrew?
I think we have seen, that's a very good question. And actually we are exploring incorporating of this new technology as part of our platform. We have seen the decentralizing of, or rather disrupting of the new technologies as part of improving the remittances. And we also see, and that has been also one of the key drivers, the technology and emerging of the digital platforms. And we also know, I wanted to also bring in a different perspective as I build on that point. As we have been trying to explore the crowdfunding as one of the key drivers for driving investments. And the reason for this, and as we speak towards different generations that are remitting towards different African continents. So we also see, so the first generation being those parents who have been there, there's also the segment of the siblings who have come out of the families that have been brought up, or the parents who went abroad and got families and they have kids who become the second generation, and those second generation, they're having the third generation. I also wanted to bring in the perspective of most of the second and third generation are very high-tech savvy. They have the gadgets, they have access to technology, and they are quite explorative when it comes to different digital mechanisms that they can use. And as we are having the insight conversation, as we are gathering the insight to build on our platform, one of the key driving factor for them to be able to remit or rather contribute or rather channel investments towards startups was we will be more comfortable, and we will have more trust to a platform that is digital, that is incorporating other forms of technology. So I see the world moving towards that, but then also there is a limiting factor. For example, in Africa, we only found that South Africa and Kenya are a bit advanced when it comes to regulatory framework, because some of those need to be incorporated, and we need to create maybe sandbox to test some of these technologies within the enabling environment. The reason I'm bringing the regulatory framework into this conversation is also, as we mentioned before, is one of the, can be an enabler, or also can be a hindrance. As we were mentioning, what are the drivers? Yes, regulatory framework need to be enhanced, need to be more, there need to be more collaboration, because there's a lot of siloing, different players doing things in a silo manner. So how can we create more collaborative to be able to join efforts in different pockets of diaspora remittances that are happening? So so I just wanted to circle that to regulatory framework and incorporating new technology, because then if the regulatory framework is enabling, then we will be more accommodative of new technologies that can be able to harness and increase the remittance towards the investment opportunities that we're talking about.
Okay, thank you very much, Anne, for that. And I'm glad now we switched on the microphone very seamlessly. Yeah, beautifully done. Wow. Anyway, so Peter Olo, who is the lead at Social Enterprise Society of Kenya, SESOC, the umbrella body for social enterprises and social entrepreneurs in Kenya, is asking. This is a question directed to Andrew or Rose. Share some insights on the diaspora remittances future trends post-COVID-19. I know Andrew will be a gentleman, he'll say ladies first, so Rose, proceed.
I wanted Andrew to pick the question. However, the trend, we've seen an increasing trend in terms of remittances, even during the pandemic. So my projection is that we'll still get more, because one, people in the diaspora are getting more aware in terms of the investment opportunities. There's a diaspora policy that's in place that has made it very easy for Kenyans living abroad to invest back home and to remit money. There are many more options of remitting money. We started with the traditional way, which was the wire transfer. You had to literally walk to a bank to send money. Right now, you can send money from your phone while maybe you are during your break time. There are also increased incomes in the various countries. Say the people who work in the diaspora are mostly in healthcare. Even in this crisis, we saw there were increased incomes, they were able to remit money. So in my analysis, I would see an increased trend, because there are more investment opportunities in Kenya and there are increased incomes. There are many, it's easier to remit money. So yes, and there are many more people traveling to the diaspora for work. So yes, we believe there would be an increase in terms of remittances. And there are many other partners who are coming in to support the diasporas who want to invest. Besides banks, we've seen circles also tapping into that market. So very many opportunities.
Okay, thank you very much, Rosaline. Andrew, you had something to farm up to close up that point? Or
okay. Yeah, thank you, Noah. And just before I answer that, just to mention on the blockchain that Anne actually spoke on to it very well. Just an answer to Daniel and the panel and the audience is that blockchain is quite interesting. And as you look at it, even the regulator has no issue with blockchain as a platform. The issue is normally the what comes out of the blockchain. It's not really the platform itself. The platform is capabilities are fantastic and humongous. If you look at some of the countries, for example, if you go to the UAE, they're today currently using blockchain as a way of storing information and data about people. So it's easy for you to access. You cannot open one bank. If you want to open one bank account, that is enough for any other bank account, any other banker to access your information with your permission. And if you look at some of the NFTs coming up, if you look at all these products that are coming up, so blockchain as a platform is fantastic, and we see it's going to play a key role in remittances in the near future. It's all about the trust. We have seen even people putting in the value chain process on blockchain. There's some companies in South Africa that have done that. So blockchain as a platform is still getting accepted. It's still being used widely. It is actually the currencies that are coming out of it that regulators have an issue with because of the basis in terms of how they are based. Economically, Victor can speak more into that once again, in terms of how the economics look for value. However, as a platform, we think it's going to play a key role in a lot of sectors, not only remittances in the coming future. Then mentioning about the trends, as Rosina has mentioned, we see that this trend will keep growing. If you remember when COVID started, the estimation by the World Bank was that we are going to see remittances dropping, but that has not happened. It actually kept growing. The economies have been affected a lot. If you just look at Kenya, for example, what happened recently, everyone was kept on telling the president, please open up the economy, we are suffering. It was opened up. And so that opened up a door of opportunities, that opened up a huge demand for value in the market, for actually money in the market. And part of this is being filled by the remittance world. And even now, as we're seeing Omicron coming up and we're having a lot of, what do you call it, restrictions, travel restrictions coming up, still, that means that there's a need for money to move to ensure that businesses and livelihoods keep on continue. And so post-COVID, we don't know when that will be, in terms of when the post will be, but we see remittances will keep on increasing, will keep on growing all through. Remember, even if you look at, for example, one of the reasons people send money is school fees, for example. Next year, we have a 4-term year, so that means there'll be more money coming through. So basically, to answer that question, we just see the growth trend will continue. In terms of how big, how small, is questionable because of the different ways COVID is behaving, but we see it will keep on growing because of that. Thank you. Now, over to you.
Thank you very much, Andrew. I want to bring in Victor. Victor, I know that's the danger of wearing red, because somebody can just raise a red card on you, and maybe touch on, yeah, I'm being told to wrap up. It's already 4:20 and the discussion is just beginning. I don't know what we'll do, but we still have a couple of more questions. So just be crisp. In terms of local businesses operating in the MSME sector in the country and even startups, is there something that we can do to position ourselves better? I know the technology bit has been handled, but imagine a business that is taking advantage of where the future is going, even in terms of remittances. I think it will be better positioned to take advantage of remittances into the country. So what can businesses do to be better positioned to take advantage of the inflows?
Yeah, thanks very much. No, I think the reason why I'm excited having this discussion has been that if you look at the trend in terms of business financing over the last decade, we've had development funds, your youth fund, women fund failing. Now they are trying to consolidate to a different fund. We have had mobile credit being tested out, and we've seen a lot of small businesses picking it up. Reason why? It's a change of business model, from your traditional collateral kind of a model. So I think if, for example, we are able to look at businesses, and I think Anne had mentioned KYC, if we can be able to find a model where a scalable model where we can quickly be able to evaluate some of these businesses and for them to be able to get credit in one way or another, I think that would be very exciting. I think Kenyans are very entrepreneurial. Any opportunity that comes out, and as long as they're able to qualify, I think Kenyans will always jump at an opportunity.
Thank you very much, Victor. Let us quickly answer these questions. Agneta Nyalita asks about remitting funds for volunteer initiatives or community social welfare. Are there any subsidies In terms of charges, this brings us again to the cost of remitting, even to voluntary work. Who will pick that question briefly before we proceed to the last question?
Maybe I can quickly tackle that. I think it depends. It depends with different partners, strategic partners that you're working with or you're aligning with. So in terms of framing a project, you have the anchor partner, you have the funding partner, you have the supporting partner, you have the different stakeholders that you're working with. And the key to any project is to ensure from onset you do the buy-in session where you have different partners that you think that might contribute to achieving the end result of any project. And with that, you are able to identify key partners. For example, in this case, if it's the government agency that in one way or the other are likely to have indirect benefit for your project to take off. With those having the buy-in, for example, in our case, working with the central bank, working with the FSD, working with SIDA, working with CMA, working with Nairobi Stock Exchange, working with financial institutions. That's why we are hosting this conversation. Is crucial because they contribute to different aspects and component building stone for making diaspora remittances affordable and able to unlock those as investments because they play a key role in complementing that whole process. So in your case, if it's a charitable cause, who are different players are you working with? How are you activating them? Because having them as part of the conversation, they are able to influence and lobby the relevant authorities to enable to maybe guarantee you the subsidy that you may require because they see the contribution that is supposed to trickle down to the bottom of the pyramid. So the subsidy comes with your negotiating power, alignment with different stakeholders that you're working with, and it will not just come as a blanket offering into your process. You have to cultivate it, but also be strategic in terms of how you position yourself. So that is key. I also wanted to quickly contribute to how can business position themselves, because that's where we play, and that's why we are doing what we are doing as Pangea. We are very passionate in ensuring that not only do we unlock and avail the investments using the alternative investment mobilization, but also make sure that they are investable viable cases that we can be able to channel this investment. And like Victor said, it's very important for business to know, to understand their business model quite well. That is one. But also one of the key hindrances, like I mentioned earlier, is also knowing where to play. How do you, where are you playing? What are the market segments that you're positioning yourself in? And what is your key pain points that you're addressing, and how do you communicate that, and how do you make sure that you're able to package your communication in a manner that it's palatable to the audience that you're speaking to. So if you're speaking to diaspora community or diaspora investors who are potential investors, how do you make sure that you're able to align with their areas of interest? So that is key in packaging your business model. So packaging your business model. Secondly, communicating. How do you make sure that you have the right storytelling as part of the package? One of the key hindrances I have seen with startup not being able to raise investments is how they tell the story. And you will notice most of the businesses that have been able to unlock investment, it's because they have mastered the art of telling their story and telling the positive outcome of what they project to achieve. So how do we ensure that we are able to help the businesses that we're supporting to be able to tell their story very well? And also, lastly, it's having the competence to be able to scale and having a clear picture of how the future looks like. Because any investor, whether they're impact driven or not, they want to see a very clear picture of how that will be achieved. So do you have a very clear picture of how the future looks like? And also, are you addressing a pain point in the market? And that, is it scalable? Is it big enough? How big is it in your imagination, and how can it be scaled? If you have all that packaged in a manner that is understandable to anyone, then you will be in the right position for you to be able to attract investments. But also of importance, be in the right environment, connect with the right ecosystem. Being an entrepreneur, and I know that being an entrepreneur myself is very lonely. How do we ensure that you're connected to the right ecosystem? Join ecosystem network, entrepreneur support organization, some networks, just connect with the other founders, ask questions of how are they able to raise, what are they doing, what are the challenges, learn from that, and also ask to be connected to existing funding organization or entrepreneur support organization. That's the only way you can be able to build your networks. So I just wanted to mention that because that is very key to what we're doing as Pangaea.
Okay, thank you very much, Anne. I know it's almost 4:30 East African time, EAT. Quickly, this is the last question, then we go to closing remarks. This is from Daniel Kiriongi, and he's asking, what do you think should be done to bring Somalia into the ecosystem? Visa and MasterCard have embraced them as a country and doing a lot of business there. What can we do as a country to tap into the potential while staying compliant to the remittance issues the country elicit? And this is the regulatory issue within the African ecosystem. We've had this discussion, not necessarily this, but even in the context of, Africa Continental Free Trade Area. I mean, we still have these barriers. So from Daniel's perspective and his question, who's willing to take that up briefly in less than 2 minutes, then we close it up. I love volunteers, and I know our panel are very good at volunteering, especially when somebody like Andrew is already picked up the mic. Andrew, over to you.
Okay, thanks, Noah, for that, and thanks, Daniel, for that very good question. So, true, Somalia is one of those countries where there's a lot of potential, a lot of business going on. But what you have to remember is the issue around Somalia is not even as a country. As a country, it's not even a sanctioned country. It's just basically some activities that have been sanctioned. And so even from the regulator perspective, it's just more looking at how then do we understand the KYC bit and the reasons for the remittances from that particular country. Unfortunately, the case in the past has been that anytime there's a little bit of remittances coming from Somalia, then a few things that are not good in the country happen. And that is the reason as to why you find the regulator is very strict around that. For example, if you look at the deceit story, and I hope no one in this particular audience was affected. If any, apologies for that, for mentioning it. However, if you look at how the funding was done, there's a lot of remittances involved, and a lot of remittance companies also were taken into task and investigation by the regulator. So we're working closely with the regulator, even us as banks, to see, and also the money transfer companies, to see how then we can be able to get to that level where at least that particular activity is accepted. There's a lot that has to be done around KYC, a lot that has to be done around their kind of documentation, the reasons for the transfers, how it lands, and that's the reason you see it's very granular, even to like what we as banks are doing in terms of exactly where the money is going to and where it's being delivered. So there's a lot of that is going on. It will take a while, and at least it's glad some of the financial institutions have started accepting them. MasterCard was the first. It took Visa years to accept them, almost 4, 5, 6 years. They're there now, so it will take a while, but eventually they will get in the ecosystem, but there's a lot of work to be done. For example, the Habshi is a regulated company in Kenya, and one of the issues they have is they cannot allow remittances from Somalia. So they can do businesses from anywhere they want to do, but not Somalia itself. So again, that is a corridor that has to be a lot of courting. There's a lot of issues around that. And remember, even as a country, if you're found to be activating that particular kind of corridor for those kind of activities, you as a country also get into problems with other correspondence banks across the world. And anyone will tell you, if you start getting problems like that, it means your economy is affected. So Daniel, it's a process, it's ongoing, it will take a while. It is not something that we'll wake up one day and say it's done. But yeah, everyone is aware about the issues and the potential that lies there. Thank you. Now over to you.
All right, thank you very much, Andrew. So coming to the tail end of this engagement, financial institution engagement session. And so far, the hour and a half that we've been here, so amazing and insightful. So for our closing remarks, whether we have achieved the goal that we are aiming, I know there will be links to be shared for us to share this information and spread it further. Some people could not be here, maybe because of time or other engagements, but they'll be able to get to interact with this content. So at this particular moment, as we close up, I'd like us to give an opportunity to our speakers to give their closing remarks, or time is out on us. I'm looking at my colleague, Julie, and she's just using her eyebrows to communicate. That's a new language that we've learned, especially in the era of masks, yeah? You communicate differently. And now in Kenya, there's another flu going around, yeah? People went for Solfest, they are spreading flu like no man's business. So keep praying for us, those of us in the diaspora. So I really appreciate your participation. Thank you very much, Anne Lawi, Managing Director of Pangea Trust. Thank you very much, Andrew Kabeke, Head of International Money Transfer at KCB Group. Thank you very much, Rosaline Chalo, Acting Head of Diaspora Banking at KCB Group. Ken Gishinga, Chief Economist at Mentoria Economics. And the one and only Victor Tieno is the Managing Director at Fifa Consult, and our able participants. Thank you very much for participating. We've shared the link right there. Remember, the hashtag still continues to be Pangea Trust. Engage with us on social media. Thank you to our partners, Mentoria Economics, KCB Bank, Fifa Consult, SIDA, for powering this session. And I hope that we've gained from interacting. Now let's go to the ground and work, because here it's been talk. Now, kwa ground ni kufanya kazi. All right. So God bless you. Thank you for your time. Have yourself a good evening. And we won't see each other maybe till next year. So have yourself a good Christmas. I know, Victor, that is a Christmas dress, but I won't speak about that. So have yourself a good evening, and God bless you. Peace out. Noah Kipkimbo is my name. See you next time when I see you.